Two things really. One is that there's going to be lots of unintended consequences, and one indeed may well be that Mr. Trump is actually giving a backdoor push to the use of the renminbi as an investment currency and also use in world reserves. Just the very fact that the Americans do use their extraterritorial power over the dollar in lots and lots of different ways does make other countries now more likely to look at non-dollar currencies to hold their reserves. It also pushes countries into gold, for example. We've seen that with the Russians. And also more generally, I think Mr. Trump being protectionistic towards the Europeans as well will now drive the Europeans and the Chinese to do more things together. So this renminbiization of the financial markets that we're talking about will now be, I think, empowered, particularly on the continent of Europe. It's already happening between Britain and China, but I think this will now happen between Germany and China. So unwittingly, and surely Mr. Trump hasn't thought about this, and even if he did think about this, he may not understand it. Unwittingly, he is actually helping the globalization of the renminbi.
Let's talk more about this trade issue. If it resulted in the inflation to build up in the US, how would the Fed will react? And do you think it means more severe liquidity problems for emerging markets?
Well, I think both of your points are very reasonable and possibly correct. The Fed, I think, will raise interest rates one more time in September. That's more or less programmed because the economy is doing well. We haven't had any negative effects. Whether they do again in December is indeed a question of whether they may be becoming a bit too patient about inflation. There's these second and third order effects on inflation, which we do see just by putting up tariffs on aluminium. It does increase the price of beer by a few cents. So this could be one other reason why the Fed might be a bit more hawkish. Regarding emerging markets, one has to be rather scared at the moment. There's Argentina, there's a country like Turkey. There's also others which are in a vulnerable position as emerging markets. Already we've seen this. South Africa is another one. There's other countries which are in a very good position, such as India, that have been benefiting from the fall of the oil price. So it actually all depends on where you are in the emerging market field. You have to be much more nuanced. You can't just say they're all going to suffer. Some will, some won't. Some will differentiate themselves.
The Shanghai-London Stock Connect is expected to be launched as early as this year. And what's your comment on it, and also your comment on renminbi's globalization as a whole, or if you prefer to say, renminbilization of the global capital?
Yes, the Stock Connect is just one part of this now intertwining web of activities that you now see on the financial markets. The inclusion of the A shares in the MSCI index was a major breakthrough. That took years, of course, to prepare. We have a Bond Connect as well. So this is part of this edifice of different structures you have now linking the Chinese financial markets with those abroad. The entrance of the renminbi into the SDR in 2016 was a major landmark in this. So it's going to be a gradual process with halts and bumps along the way, but it's absolutely unstoppable. There will now be an international renminbi component of the world economic and financial system.